Well, good morning, Jaginder Rana here. Topic for our discussion today is marine cargo insurance. Marine cargo insurance. Anything that is transported from one place to another is called cargo. If it moves on its own, it is not cargo. For example, car being sent on truck, railways, ships, aircraft will be cargo and can be covered under marine policy. As long as cargo is in transit, subject matter, it is subject matter of marine insurance. So, coverages are different. Say land transit, it's by railroad. Overseas transit by sea. Clauses applicable are again different. For inland transit, the clauses applicable are Inland Transit Clause, in short it is ITCA, or list named exclusion. ITCB, basic cover, named exclusions. ITCC, fire only, named exclusions. For overseas, this is ICCA, that is called Institute Cargo Clause A. All risk, named exclusions. ICCB, named peril, named exclusions. ICCC, basic maritime perils, named exclusions. Risk covered in inland transit. Inland Transit Clause A covers all risk of loss or damage. ITC-B covers physical loss or damage caused by fire, lightning, breakage of bridges, collision, derailment or accident. ITC-C, physical loss or damage caused by fire and lightning. As far as exclusions are concerned, willful misconduct of the insured, ordinary losses, insufficiency or unsuitability of packing, delay, inherent vice or nature of the subject matter insured, war, malicious damage, strike right and civil commotion. This is add-on. Add-ons means on additional premium it is available. Duration of coverage is important because as soon as the consignment leaves the seller's premises, continues during ordinary course of transit, and terminates either on delivery to consignee's warehouse at destination named in the policy, or in case of rail only or railroad until expiry of 7 days after arrival of railway wagon at destination station, or in case of road only until expiry of 7 days after arrival of vehicle at the destination town, whichever shall first occur. Risk coverage for ICC is different because risk covered by vessels. Then ICCA covers all risk of loss or damage to the subject matter insured under the policy approximately caused by insured peril except risk specifically excluded. Perils covered in ICC-B and ICC-C are different because fire and explosion is covered under both. Vessels or craft being stranded, grounded, capsized or sunk are covered under ICC-B and ICC-C both. Overturning or derailment of land conveyance is covered under ICC-B and ICC both. Collision or contact of vessel, craft or conveyance with any external object other than water are covered under both. Entry of sea, lake or river water is covered only under ICC-B and not under ICC-C. Risk coverage continues. Discharge of cargo at port of distress covered under both. Earthquake, volcanic eruptions or lightning is not covered under ICC-C. General average sacrifice covered under both. Jettison is covered under both. Washing overboard is not covered under ICCC. General average and salvage charges are covered under both. And as far as duration of coverage is concerned, as soon as the consignment leaves the seller's premises, continues during ordinary course of transit, and terminates either on delivery to consignee's warehouse or other final warehouse at destination named in the policy, or on delivery to any other warehouse prior to at destination which the insured may elect for storage other than in ordinary course of transit or for allocation or distribution, or on expiry of 60 days after discharge overside of the insured goods from the overseas vessels at the final port of discharge, whichever shall first occur. Then for ICC clauses, exclusions are there, like willful misconduct of the insured, ordinary loss that is inevitable, improper packing, inherent vice, delay, insolvency, financial default of carrier, manager, charters or operators of vessel, deliberate damage or destruction, nuclear weapon exclusion, war and SRCC add-on, unseaworthiness and unfitness of vessels or craft. There are certain type of policies applicable to marine cargo insurance. Some of them are specific voyage policy, open cover, annual turnover policy, duty insurance, seller's contingency insurance, increased value insurance. Incoterms are applicable to marine cargo insurance. These terms deals with risk, deals with transfer of risk, rights and duties of buyers and sellers, deals with who organizes the transport and insurance. Then parties involved, the seller, who is known as the consignor, and the buyer, who is consignee. Banks, the insurance company, port authorities, the carrier, means ship, air, road, rail. It could be anything. Or it could be all of them. It depends upon the journey. Custom authorities, shipping agents, cleaning and forwarding agents, popularly known as C&F agents. Stevedores, contractors appointed by shipping company for loading and discharge of cargo. Whenever there is a claim, certain specific documents are required, like original insurance policy or certificate or declaration, duty discharge or letter of indemnity. Then original or signed copy of invoice with the packing list, signed copy of bill of lading or airway bill, exchange control copy of bill of entry to check delay and duty payment, letter of subrogation, a special power of attorney, lost overboard certificate or short landing, non-delivery certificate, landed but missing damage certificate, registered ID cards or any other evidence, claim notice. So these are the documents which are applicable whenever there is a claims. In the Incoterms, the most important things is Incoterms, say for example XW. It refers to the risk transfer at seller's premises after loading. Exporter arrangement insurance is required. Exporter does not buyer to arrange. In case of FCA, there are two things: risk transfer and exporter arranges insurance. FCA. FCA means when delivered to carrier named. So exporter arranges insurance up to delivery to carrier. FAS, when delivered alongside ship, up to port till placed alongside ship, loading not covered. FOB means free on board, when loaded on ocean going vessel, up to loading on ocean going vessels, loading covered. CFR, when handed on ocean going vessels, up to loading on ocean going vessels, loading covered. And CIF, when loaded on ocean going vessels till delivery to wire as per the contract of carriage, for example destination port. Thank you.